Welcome, everyone. Today we're going to talk about Applied Digital Corporation, APLD, one of the AI stocks that has been skyrocketing recently. On January 28th, Northland Securities raised its price target on Applied Digital from $40 to $56 and maintained its outperform rating. This update followed exciting commentary during the company's Q2 earnings call. Management revealed that it is in advanced discussions with a new investment-grade hyperscaler regarding up to 3 potential sites totaling approximately 900 meg. This content is for informational and educational purposes only and should not be considered financial, investment, or trading advice. I am not a registered financial advisor. All opinions expressed are my own and are based on publicly available information believed to be reliable at the time of recording. Investing in stocks, including companies such as Applied Digital, APLD, involves risk, including the potential loss of principal. Past performance does not guarantee future results. Always conduct your own research and consult with a qualified financial professional before making any investment decisions. I may hold positions in the stocks discussed. This content is not a recommendation to buy or sell any security. A watts MW of capacity. Earlier, on January 8th, Craig-Hallum also increased its price target from $39 to $40 and kept its buy rating. The firm highlighted advanced talks for 3 sites representing 900 megawatts of potential capacity, with each campus potentially expanding to 1 gigawatt GW. Combined with the existing Forge 1 and Forge 2 campuses, this could translate into roughly 5 gigawatts of growth capacity over the next several years. Applied Digital designs, develops, and operates digital infrastructure solutions for high-performance computing, HPC, and artificial intelligence (AI) industries. Recently, the stock closed at $37.69, up 8.49%, after the company announced it had begun construction on a new AI factory, reflecting strong demand for its purpose-built AI infrastructure. Trading volume reached 47.5 million shares, about 52% above its 3-month average of 30.1 million shares. Since going public in 2022, the stock has gained more than 700%. In broader markets, the S&P 500 rose 0.03% to close at 6,915, while the NASDAQ composite gained 0.28% to finish at 23,501. Among industry peers, Core Scientific rose 3.93% to $18.79, and Digital Realty Trust gained 0.45% to close at $159, underscoring steady investor interest in data center and AI-related companies. Applied Digital gained over 300% last year and continued rallying even after Jim Cramer urged investors to take profits. The company recently broke ground on Delta Forge 1, a new 430 megawatts AI factory campus located in a southern U.S. state, expected to begin operations in mid-2027. Texas Capital upgraded the stock from buy to strong buy. Meanwhile, Roth Capital and Needham & Company reiterated their buy ratings. In 2025, Applied Digital delivered approximately 221% returns, and as of February 3rd this year, it had already gained 41%. Trading above $35 per share. Following its January 7th Q2 earnings release, the stock surged roughly 24%. Revenue increased 250% year over year to $127 million, while net loss narrowed to $37 million or 22 cents per share, significantly improved from a $0.63 per share loss a year earlier. The company energized its Polaris Forge 1 facility in North Dakota, the first of 3 buildings under development. It has been leased to CoreWeave under a 15-year, $11 billion agreement. Additionally, Applied Digital signed a 15-year lease with a U.S.-based hyperscaler for 200 megawatts of AI and HPC capacity at Polaris Forge 2, expected to open in 2026. This agreement is projected to generate another $5 billion in revenue. Full capacity at Polaris Forge 2 is anticipated in early 2027, with a 3rd facility coming online later that year. The company also operates 2 other fully utilized facilities in North Dakota, primarily serving crypto mining customers. However, the Polaris Forge campus is purpose-built for AI and HPC workloads, targeting more lucrative hyperscaler clients. Analysts at Roth indicated in late January that another hyperscaler agreement may be imminent. Applied Digital is targeting $1 billion in net operating income from data center hosting within 5 years. In Q2, net operating income was approximately $16 million, highlighting the scale of anticipated growth. While the company is positioned for explosive growth, profitability may still be a few years away due to the substantial capital investments required. Applied Digital has access to revolving credit from Macquarie Group, providing financial flexibility during expansion. All 14 Wall Street analysts covering the stock currently rated a buy, with a median price target of $43.50, implying roughly 22% upside from current levels. As one of the early movers in hyperscaler-focused AI data centers, Applied Digital holds a competitive advantage. However, investors should remain mindful of its high valuation and multi-billion-dollar debt load. The company recently approved a $50 million senior secured promissory note to support Polaris Forge 2, carrying an 8% interest rate for 12 months. The interest accrues rather than being paid in cash and guarantees the lender a minimum 1.10x return. The stock recently traded at $38.26, delivering 36.1% year-to-date gains and 404.1% returns over the past 12 months. Short-term moves of 4.3% in 1 week and 1.5% over 1 month demonstrate how quickly sentiment around APLD can shift. For investors, the key question is whether long-term lease commitments and contracted megawatts provide enough future cash flow visibility to offset the company's significant debt and reliance on a limited number of customers. Construction and delivery obligations also increase execution risk. Applied Digital's rapid expansion and approximately $16 billion in long-term leases position it among high-growth infrastructure providers, closer to Equinix and Digital Realty than its earlier crypto hosting. In the most recent quarter, the company reported $126.6 million in revenue, up 250% year over year. Net loss attributable to common stockholders was $31.2 million, or 1 cents per share, significantly improved from last year. Adjusted net income came in at $0.1 million, with adjusted EBITDA of $20.2 million. Applied Digital operates through 2 main segments, HPC hosting and data center hosting. While APLD shows strong potential, investors should carefully weigh growth opportunities against valuation, debt levels, and the timeline to profitability. If you found this breakdown helpful, don't forget to like, share, and subscribe for more in-depth stock analysis and AI market updates.